Nuclear news coming in hot this week. Let's dive right in. First up, price action. The Sprott Uranium Miners ETF, URNM, up 2%. The broader stock market up 2%, still tightly correlated to the macroeconomic environment. Again, short-term price action, not as important as long-term fundamentals. So let's dive right into the long-term fundamentals. First up, we've been covering this wall of money that is just waiting to pour into the nuclear energy industry. And so now we have some confirmation of that, just getting started. Why Silicon Valley is so hot on nuclear energy and what it means for the industry. From 2015 to 2021, the pace at which venture capitalists put money into private nuclear companies eclipsed the entire VC space and even the fast-growing climate tech space. That new money coming from new places is leading to smaller and more specific kinds of nuclear reactors. And so take a look at this chart, just showing the exponential growth in Silicon Valley venture capital deals, big money pouring into this space. 2022, just massive investment capital happening behind the scenes. This is all very correlated to nuclear energy being considered as green, as solar power, as wind. Venture capitalists see that we're in the early stages of a revolutionary new technology, revolutionary new fuel source. They are pumping money in. So we're just getting started. Here's another update. Parnassus Investments manages $38 billion in ESG-focused mutual funds that have until now excluded investing in nuclear energy. Their move to include nuclear signals a radical shift now underway towards recognizing nuclear as green, sustainable energy. Parnassus, billions of dollars of assets under management, ready to pour this capital into nuclear. And so what do these deep-pocketed institutional investors see? Well, they look at the future landscape of energy and they compare nuclear to everything else. This comes from the Office of Nuclear Technology. How much power is in 1 gigawatt? So we're comparing where to generate energy, right? We're comparing the different sources. Well, 1 gigawatt is 3.125 million photovoltaic panels. So lots and lots and lots of land, lots of natural resources, lots of toxic chemicals, all going into these millions of solar panels. Or it's 412 utility scale wind turbines. Who has space for 412 utility scale wind turbines? 110 million LED lights. Those are the lights we're trying to power with 1 gigawatt of energy. 1.3 million horses, right? Obviously not practical. 9,000 Nissan Leafs. That's what we're trying to power with 1 gigawatt. And so one commercial nuclear reactor will produce 1 gigawatt of energy. And so this is how dense this energy source is. So this is what the ESG big institutional investors are seeing. They're seeing that nuclear power is revolutionary, and we're still in the early stages of the mass adoption of it. And so Silicon Valley is also excited about small modular reactors. The next big thing in nuclear will be very small, and we're just getting started in seeing the rollout of this new technology. Ontario Premier Doug Ford marks start of construction on Canada's first grid-scale nuclear reactor. Doug Ford was in Clarington, Ontario Friday to mark the beginning of site preparation for Canada's first grid-scale small modular reactor at Darlington Nuclear Site. Small nuclear cheaper than solar and wind as Canada greens its power grid, a report. Collaborators to develop SMR-based hydrogen production concept, NuScale Power, Shell Global Solutions, and research participants, including Idaho National Laboratory, Utah Associated Municipal Power Systems, Fuel Cell Energy Production, F-Poly Solutions, and GSE Solutions, will develop a clean hydrogen production system for use in small modular reactor power plants. This is really early stage. This is what's exciting about getting in early before this energy is really adopted at scale, but we're seeing it just roll out. India to develop small modular reactors with up to 300 megawatt capacity for clean energy transition. INEOS in talks with Rolls-Royce on mini nuclear power plant technology. Chemicals giant wants to produce zero carbon electricity to power plant hydrogen systems at Grangemouth Refinery. Of course they do. And so this is part of why Silicon Valley is dumping money into this space, because there's a lot of profit in revolutionary technologies, especially when you can be an early stage investor in them. Nuclear fuel consultants UXC report that their November month-end long-term uranium price rose $2 to $51 per pound to its highest level since August 2013 for a new 9-year high on highest term contract volume by nuclear utilities since 2012. 12. So let's dig deeper into the demand side of this space. Let's look at the math. So here is the volume by buyer type by year. So mid to long-term contracts in 2022 have skyrocketed way higher than previous years. You can see blue represents 2022 mid long-term contracting, massive spike. This is demand, right? Spiking demand. And so there better be some supply to meet all this demand. Well, at the same time as utilities are scrambling to acquire as much uranium as cheap as possible, you have the Sprott Physical Uranium Trust taking supply off the market, in addition to other Wall Street firms just accumulating supply as cheaply as possible because they understand that there isn't currently enough supply to meet all this demand. So why not pick it up cheap? Total pounds of uranium held by the trust. You can see the growth trend. Obviously, we had that massive spike late 21, early 2022. We've plateaued a little bit, but they have just announced that the Sprott Physical Uranium Trust is allowing investors to purchase physical uranium in drums stored on their behalf by Sprott. Investors buying Sprott Physical Uranium Trust shares now at a 12% discount to net asset value are purchasing drums of U3O8 for just $44 per pound compared to spot price hovering around $50 per pound. So we're seeing a confluence of factors. We have a wall of money, a wall of incoming demand, not enough supply, reorganization of supply chains from east to west, dismal production. And so it's all leading to one outcome, which is a supply squeeze. And we're getting there slowly but surely. We're still tied down by macroeconomic factors. But again, the smart money clearly pouring capital into this space. Early stage investors taking note. Early stage investors buying into this bursting new technology, this new revolutionary fuel source. And we're just staying on top of this market.